Hi guys, Zaheer Anwari here on behalf of the dynamictrader.com. Thank you FX Street for having me. Can I get a quick hello that you can hear me and that you can see my screen? Administrator. Okay, fantastic. All right, brilliant. Thanks, Linda. Hi guys. Yeah, it's been a good few weeks, I think, pretty much all over summer. Um, where I haven't done a webinar after being on here for quite a number of weeks consistently. So a little break always does good. Main reason for the break really, I've been away, I've been on holiday, I've been traveling quite a bit. And secondly, well, the summer months tend to be very quiet and nothing generally goes on. So it's a good time to get away. We are now in September. We're in the second week of September really, and we're still waiting for things to happen. The foreign exchange market is very quiet. It's in a consolidation. And it's really a time and a period where you want to be standing aside and protecting your money. Of course, it's not often practiced very well. People are always chasing trades, day trading, intraday trading, scalping, whatever it is. And there's really a need. This really comes from a need of trading and making money. But part and parcel of being a good trader is really knowing when to trade and when not to trade. So we'll go to my screen. By the way, before we get into that, if you like what you see today and if you'd like to take it further regarding the software, regarding the training, if you want to take it up a notch from day trading to longer term trading, then give me a shout. Check out this website, tdtpro.trade. Now, one thing to remember, guys, is that there's nothing wrong in day trading. I know day trading is the most common approach for most private traders, but there really is a time and a place to day trade. There's a time and a place to trade long term. You don't want to just rely on day trading, because sometimes the market will do three things. It will either be in a phase where longer term strategies are more useful, i.e. trend trading. It'll be in a phase where shorter term strategies are more useful, and then it'll be in a market where you just want to be standing aside and not taking any trades whatsoever. This is key to trading. Just day trading, day in, day out, just for the sake of trading is not the way to do it. Where a lot of people go wrong is instead of understanding the markets and how the markets move and then adapting to the market, a lot of traders try and adapt the market to them. And they've got it the wrong way around. The market has been in process and has been moving in a particular way for decades. You want to understand these periods of movements and these periods of consolidation, these patterns that repeat ultimately, and you then want to have the right strategies to take advantage of them. Trying to adapt the market to you is a false economy, and that's how a lot of people end up blowing accounts and not really getting the results that they want. So seeing as it's been quite a long time since I last did my last bit of analysis, I'm going to go right back to basics and really sort of explain my page setup as a trader. Can I just get a quick hello in the chat box that there are people out there listening to what I'm saying? If I can get a hello at some point, that will be great. And of course, if you have any questions, please just put them in the chat box and I'll get back to you. Hi. Hello. Hi. Thanks for that. Okay, so good to have you with us, and thanks for the hello message. Okay, so as a long-term trader, I need the right time frames to be able to do that. So I've got the monthly in the top right corner, weekly in the bottom left corner, and daily in the bottom right corner. So monthly, weekly, and daily. Those are the time frames that I use predominantly. If I'm in a day trading or a shorter time frame trading market, I will then go down to a 4 hour or a 1 hour. But my whole analysis to determine what kind of market conditions we're in is done using the monthly, weekly, and daily. I'm going to start with the monthly chart. First and foremost, I'm going to load on these pink lines. Now, what do these pink lines represent? They represent the high, the low, and the closing price of the previous calendar year. So 2015. This is the high And this is the low of 2015. This is the closing price of 2015, which will be the opening price of 2016. Now, why are these pink lines useful? Because they help to start telling me what kind of market conditions we are currently in. So what I mean by that is if price is trading inside these pink lines, I tend to dismiss the chart. For me, that's a consolidating market. What I'm looking for is price to either be trading above the high, so we have a bullish bias, or below the low, where we have a bearish bias. So that's what I'm looking for. That's the start of me starting to build a picture of what price is telling us. Remember, in trading, nothing is guaranteed. We want to try and build a picture of probabilities. Where do we have more chance of making money than losing money? So when price is trading within these pink lines, I generally dismiss the charts. So Aussie dollar, US dollar, it's inside the pink lines. If we go to the next chart, which is the Aussie dollar, Canadian dollar, again, you can see it's inside the pink lines. I'm not interested. If I move on to the Aussie dollar, Swiss franc, inside the pink lines, I'm not interested. If I move to the Aussie dollar, Japanese yen, we can see that's trading below the pink line, so it has a bearish bias. So out of all of the Aussie currencies, the Aussie dollar, Japanese yen is the one that I'd be most interested to look for short positions because it's trading below the low. We could also look at the pound Aussie dollar. If we look at the pound Aussie dollar, that's also trading below the low of last year, so we have a bearish bias. So that's how quickly I can go through a watch list of, say, 50 or 60 currencies. If you look at my watch list, I've got the Aussie dollar, US dollar at the top, and it goes all the way down to the South African rand, Japanese yen at the bottom. So within literally a few minutes, I can go through the whole list and know exactly whether something is potentially worth trading. So if I go through that, that's a no. Aussie dollar, US dollar is a no. Aussie dollar CAD is a no. Aussie dollar Swiss franc is a no. Aussie dollar yen, potential yes. Aussie dollar Kiwi. Right, Aussie dollar Kiwi is looking interesting. You can see now that this is starting to weaken. The last time I traded the Aussie dollar Kiwi was on this bear trend to the downside. So this is going back to 2013, 2014. You can see nice move to the downside. Since then, it's really been in a consolidation. It's just been going sideways. That's an oscillating market. This is not a market I'm interested in, and you can see that it's been trading between the high and the low of last year. We are now starting to see weakness. So this is looking quite interesting. If it breaks and closes below the low and the figure 1, which is a major support level, and if you compress the chart, it's actually the all-time low on this particular chart. Now, I know what you are thinking, or what most people think, which is when price is at all-time lows or all-time highs, then it should reverse. So when price gets to this all-time low, a lot of traders will be looking for long positions. If price came to an all-time high, then a lot of traders will be looking for short positions. But the smart thing to do really is to wait to see what price does. If it bounces, then go long. If it breaks and closes below, then you want to be looking for shorting positions. And I'll give you an example of a stock that's doing that right now. This is a stock that I'm currently long on, Nvidia. And you can see if we look at the monthly chart, there is the all-time high going back to 2008. So if we take price back to that all-time high, which is around there, we can see that price actually went straight through it. There's your all-time high at around $40. And you can see that this bar closed at just below $48. And it's gone on to reach highs of $64. Currently in a little sort of consolidation around $60. So you can see when all-time highs and all-time lows are broken that we want to continue going in that direction. You don't want to predict a reversal. You will often hear to try and predict reversals, but you have to always ask yourself, if 95% of private traders fail, what is it that they're doing wrong? And the reason why a lot of them fail is because they're trying to predict tops and bottoms. They're always trying to go against the trend. They're usually intraday trading, scalping, short-term trading. The correct approach is to understand how price moves and then go in that direction of the trend that has established itself. Okay, so that's the first thing. Now, the second thing is, let's just stick with the Aussie dollar, US dollar for now, just because it's the first currency on my watch list. Now, the next point is that on the monthly chart, I highlight my support and resistance levels. So you can see here that I've got a tool that highlights resistance levels red and support levels green. Now, when you speak to a lot of traders and you ask them about their levels of support and resistance, usually they're drawn on a lower time frame. But secondly, there's not really any logic to the way they draw their support and resistance. You have to have a reason and a logic and an understanding to everything that you do. There shouldn't be any subjectivity. Whenever someone asks me, why do I do this or why do I do that? I have a very clear understanding of why I do what I do. So why are these levels resistance and why are these levels support? Well, very simple. For me, a major level of support or resistance is a high bar with a minimum of 10 bars on either side, or a low bar with a minimum of 10 bars on either side. And my tool, my proprietary software tool here, will automatically highlight these major pivots that have a minimum of 10 bars on either side. These are proven levels. So if we open up this chart, we can see that this red bar is actually the lowest point in this particular move. So we've quite clearly got more than 10 bars to the left. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this is the 10th bar. So we quite clearly got more than 10 bars to the left. If we go to the right, we've got 1, 2, 3, 4, 5, 6, 7, 8. We're now in the 8th bar. So this is September. If November, by the time November starts, and if November doesn't break this low point, that will be the 10th bar. And this is where my proprietary tool will automatically start drawing a green support level. So there's two uses to this tool. First of all, it removes subjectivity. I know exactly what levels I'm looking at. And B, the tool removes all the manual labor. Most private traders are using free software like MetaTrader or something that the broker gives them. And they're having to manually draw support or resistance levels, which then becomes a long and time-consuming process. You want to invest in good software. If you're serious about your trading, you want to invest, you want to treat it as a business. Most people don't treat trading as a business, and that's why a lot of people fail. So it's good to treat trading as a business and invest into it. And software doesn't have to be expensive. You can get good software for around, well, if you go to the website, you'll get it for around $150 a month. If you come through me, I can get it for you for around $60 a month. So as a member of our community, you get a massive discount. But the point is that you have to invest, whether it's through me or through someone else. You've got to invest in good software, else you're just going to be doing all the hard work. And a lot of people have jobs, a lot of people have family, they have kids. Time is already difficult. Time is already at a minimum. And time is our most important commodity. So if you have good software that removes all the manual labor, it will really help you progress. Now, the thing is, and something I've got to really highlight here, this software doesn't trade for me. This is not a signal service. This isn't something that's connected to my broker and it automatically opens positions for me. It doesn't do that. The software highlights all the opportunities. I've got inbuilt scanners. I've got tools that do all the work. But the final decision and the final execution and the final management of risk, entries, stops, exits, compounding, the actual final execution of the trade is all done by myself manually. But because of this software, what normally takes people hours a day takes me no more than 10 to 20 minutes a day. And that's with a bit of preparation at the weekend. So on Sunday, I do my analysis. I go through the foreign exchange market, the stocks market, the commodities market. I do all the analysis, and I do this with my community. I don't do this on my own. I do this with my community. So my community know exactly what I'm looking at for the week ahead. We do it together. And so that means Monday to Friday, screen time is no more than 10 to 20 minutes a day. And this is really, really important, guys. And crucially, what you need to understand is I'm not compromising on profit. Don't think that you need to be in front of the computer all day trading to make money. It's a fallacy. It's a lie. It's a myth. It's what brokers want you to believe, because a broker wants you to trade. The more you trade, the more spreads and commissions they make. If you look at someone like Warren Buffett has amassed his money by trading long term. And yeah, he's worth $80 billion now, but he wasn't worth $80 billion when he started investing. So that's the usual nonsense argument that I hear from a lot of people. Well, Warren Buffett's worth 80 billion. Yeah, he's 80 years old and he's worth 80 billion. when he started investing, he had thousands of pounds, just like most private traders. Okay, so you've got to think about, you've got to look at the successful people in life, and you've got to think, right, how have they done that? As individuals, the most successful people have traded long term. When it comes to short term trading, the ones that are most successful are banks. And the reason why banks are successful is because they've got billions of your money, of our money to play with. Most private traders don't have the funds of a bank or a hedge fund. So you want to think differently. You want to have a different approach, and you actually want to have a smarter approach. Okay, so I hope that explains the monthly chart. Pink lines, which are the annual levels of 2015, the previous calendar year. I want to see price either trading above the high or below the low. I then have these green or red levels telling me my levels of support and resistance. Right, now on the weekly and the daily, I look for trend, direction, and alignment. How do I do that? Very simple. I use the 200 moving average on the weekly. That's the simple moving average. And I use the 200 moving average on the daily. So I want to see price trading below the 200 on the weekly and below the 200 on the daily. So I have bearish alignment. That's when I'm looking for shorting opportunities. Or I want to see price above the weekly 200 on the weekly and above the daily 200, of course, on the daily. That's a strong bullish market. So if I have any other combination like we do here, below the weekly 200, above the daily 200, I stand aside. So the Aussie dollar, US dollar, if we do our analysis, it's inside the pink line. So that's one reason not to take the trade. It's below the weekly 200 and it's above the daily 200. So that's another reason not to take the trade. And if you actually look at price, we can see that it's just going sideways. If you look at it before, it was in a trend, several months, from 0.95 all the way down to 0.7. So that's 2,500 pips trend. Now it's just going sideways, and that's expected because after every move the market consolidates. So people that are trading the Aussie dollar, US dollar are now trading it in a time where there is actually more chance of losing money than making money. It's in a consolidation. Any profit that is made is usually short-lived because the moves are small. There's too many levels of support and resistance, and price is all bouncing everywhere, and you get in and before you know it, you're out. And all too often, traders are using too tight stop losses. If you have a stop loss of 20 or 30 pips, you're going to be stopped out. If you look at a currency like the Aussie dollar, US dollar, it probably has an average true range of, let's say, 80, 90, 100 pips a day. So if you have stop losses that are less than that, you have a very real risk of being stopped out. Okay, now the next thing I like to look at is the 50 moving average, also simple, and that's highlighted by the blue line, because the 50 moving average acts as a very good area of support and resistance. These are proven levels of support and resistance. So if we go to the euro dollar, the last time I traded the euro dollar was back in 2014, 2015, and you can see this trend to the downside, which started in May 2014, and you can see that it broke below the 200 moving average. It broke below the 50 moving average. So this area here is below the 200, is below the 50. So we have a bearish bias. Price came back to retest it. And then you can see how the 50 moving average from July 2014 all the way through to May 2015, you can see for several months how it was used as a level of resistance. And it was finally at this point where I exited my trade. So I entered somewhere around this level here, July. This is where I started entering short positions, I believe. And I exited in May. So this was a move of around 2,500 pips. By the time I exited from my positions, I had 5 compound positions, which I held for 8 or 9 months. I can't remember exactly. I exited with over 15,500 pips. And this was only on 5 trades, which I compounded and held. So day to day, all I needed to do was manage my trade. From the very beginning, from my very first position to where I exited, in total, this whole trend took me maybe, I'd say 6-7 minutes of my life to extract 15,500 pips. So less is more, which is what I'm trying to get at. And this is not some magic formula, guys. I'm not some kind of wizard or some kind of guru. This is simply me being surrounded by the right people, being taught by the right people to understand market conditions first. Most people don't understand market conditions. They think they do because they're using a lot of free information they found on free forums on the internet. As you guys know, free has no value. You have to always question, why is it free? Who's giving it for free? What's the ulterior motive? And there always is an ulterior motive. If you think people are giving away free information just to be kind, then you are probably being a little bit naive. There's usually an ulterior motive. Okay, so this webinar here with FX Street, I don't get paid for it. But the reason I'm doing it for free is for me to be able to connect and train with people who want to learn to trade properly. So there is a motive to why I want to do this. So always question why things are free. Why is MetaTrader free? Why is broker software free? Question everything. So if we put all three timeframes together, what we're looking for is an environment where we have more chance of making money than losing money. And this is really, really important. Establishing your market conditions. Once you can do this, you have your checklist. This is my edge, guys. If you don't have an edge in trading, or rather, if you can't explain your edge in trading, it means you don't have one. You should be able to explain your edge. Now, what do I mean by an edge? An edge is ultimately where you have determined a market environment where you have more chance of making money than losing money. So ultimately, this is where you're going to enter into the market and where you foresee that your trade has more chance of making money than losing money. So ultimately, you have, let's say, a 55% chance of making money, a 45% chance of losing money. This is what you're looking for, that edge. This is how casinos operate. A casino always has the edge. Unless you're playing something like poker, where you can manipulate the edge in your favor, but slot machines and all these other machines or ways of gambling, if you like, or whatever you want to call it, in casinos, it's always weighted in favor of the casino. And that's how you want to think. You want to think like the casino. You don't want to be the dumb money punter who's gone into Vegas just for a flutter. All right, you want to go in either as the professional poker player who understands probabilities and risk management and is in it for the long haul, or you want to think like the casino, where you have more chance of making money than losing money. If you're thinking like any other, if you're thinking not like those two entities, then you're going to be very hard pressed to see consistency in your money, in your returns. Also, change your language. Don't think in terms of winning and losing. This is a gambling mentality. Think in terms of profit and loss. The language that you use will determine your mindset and the way you approach the market. If you're thinking winning and losing, that's why when you have a winning day, you're happy to take a screenshot and tell everyone, hey, look how much money I've made, look at all the pips. But if you are quick to show your winning trades and how much money you've made, then the reverse of that is obviously you hide your losing trades and you disappear when you have your losing days. Whereas if you're mechanical, if you're consistent, you don't get caught up in all of that nonsense. It's simply about making money. And so it's about profit and loss. And you will understand that losses will be small and the profit will be big. Let me just look at these questions. Hello, hi, James. Does the tool work in Ninja? No. It doesn't work. So, I'm assuming your name is James, yeah? Okay, hi, James. Or who is James? My name's not James. My name is Zaheer, so I'm not quite sure who James is. But let me answer the questions. Does the tool work in NinjaTrader? No, it doesn't. It's our proprietary tools, and our proprietary tools work in eSignal. Hi, Fred. Nice to meet you. So if you wanted to check out eSignal, let me just bring that up for you. eSignal.com. I don't know if you've heard of eSignal. Okay, but eSignal is by far the best charting package in the industry. It's being a little bit slow. Here we go, eSignal.com. So check this out. And if you want to know about how to get the discounted price, so if we go to products and compare products, you can see here, by the way, I'm not affiliated to these guys, okay? So don't think that I make money from them. I'm not an advertiser for them. I'm simply here to advertise ways of making money and consistency. This is what I'm here for. And I've been using eSignal since 2007. when I started trading. There's absolutely no way that I would use any other package. You can see the prices here. Signature is the one that you want to use, and we get this for around $60 a month. And you can see that it's $145 a month. Okay, so you know, look into it. Don't be quick to use software that everyone uses. If people use the same software, okay, I have two philosophies here. And let me explain this in a way that people can understand. Okay, I don't know how many people on here. I know I can see 4 people that are online, 2 of them being Adinda and myself. So that just leaves me, and that just leaves you, Fred, and EDZFX. Okay, so I'm talking to 2 people here, which is fine. I'm happy to talk to 2 people. Okay, or even if I'm talking to Fred, happy days, right? The thing is this, Fred, these are the kind of things that you need to understand. We all know that the euro dollar is the most heavily traded currency in the world. But if 95% of traders fail, what does that tell you about trading the euro dollar every day? That's my first point. My second point is, if 95% of traders fail and they're all using free software like MetaTrader, like, I don't know whether NinjaTrader is free. I think it could be free, but there's also a paid version. Okay, or broker software, which is generally free. If a lot of these private traders are using free software and they fail, what does that tell you about the benefits of free software? Okay, so think about these things, question them, get away from it. Does the tool work in Ninja? James, you're using this on a daily chart, right? No, I'm using that tool on a monthly chart, but I can use it on the daily. I can use it on the weekly. But for me, the support and resistance levels work best on the monthly chart because I get a very, very clear picture of what price is doing. Yes, we were talking to my friend yesterday and we said, who's making money? We said the brokers. Yeah, look, it's very simple. You've seen the Wolf of Wall Street. Now, how many people mistake the Wolf of Wall Street for a trader? You speak to a lot of people and they think the Wolf of Wall Street was a trader. Wolf of Wall Street was not a trader. The Wolf of Wall Street was a broker. And he destroyed many people's lives. He stole a lot of money and he conned a lot of innocent people, a lot of good, hardworking individuals out of money. The Wolf of Wall Street now, Jordan Belfort, he's a guru. He's a motivational speaker. He's on stages in front of thousands of people. It just shows you what the system is like. It takes someone who ruined people's lives and turns him into an icon that everyone looks up to. That's the industry that we're in. That's the world that we live in today. And it's got to be changed with people like you, Fred and EDZFX, because you're the only people here. Before I came on board, I was looking at this chat and there was hundreds of people chatting away. This was moving at a ridiculous rate. As soon as I come on, it seems to dry up. That's probably because the speaker before me is talking about short-term trading and scalping and trading the news and NFP and all of these things that is far more appealing and is advertised as a sexy way of trading. When in fact, what you want to have is a sexy lifestyle, not a sexy way of trading. You want a way of trading that works, and you want a sexy lifestyle. You want to trade and invest like Warren Buffett, which there's absolutely nothing sexy about it, but you want the lifestyle of Warren Buffett and the account of Warren Buffett. Question. Your support and resistance zones are used on what time frame? As I've just said, it's on the monthly time frame. Does $60 a month include your data feed? No, it doesn't. $60 a month is for eSignal. There are, of course, training costs, but these are inexpensive, guys. These are very, very inexpensive. If you're interested, I can send these over to you at the end of this this webinar. I'll give you my email. You can email it over to me, and I will send you the details. How do you pick which stocks to trade? Okay, really good question. And I have ultimately stocks scanners. So I have a scanner that will scan through the stock market for me and tell me according to which strategies to that I have scans what stocks are worth trading. So it's a really good question because the US stock market, there are 10,000 stocks. You're not going to sit there going through 10,000 stocks. And equally, you don't want to go to Yahoo Finance or some kind of free website, which is usually which just, it tells you the stock of the day, which is not even the best stock of the day. It's just a stock of the day. So it's usually these free websites that people go to try and find information. You want to remove all of that. You want to remove all of that noise, all of that misleading information, and you want to be able to find the stocks yourself. Now, I have a stock scanner. This stock scanner, first of all, I have scanners that work within eSignal. So it will scan the foreign exchange market, the commodities market, and the stock market for me, and within a few minutes tell me the best trades. I also have another scanner that costs me around £3,000 a year that I use to scan the stock market. Now, a lot of people think, hey, you're crazy. £3,000 a year. Well, no, I'm not crazy, because for me, first of all, I've been trading for 10 years. I've built up 10 trading accounts in that time. And the reason why I've built up 10 different trading accounts is because I've invested and correctly from the beginning. Now, I didn't have, I've done it in stages. I didn't invest in a £3,000 scanner from the very beginning. I did it in stages. However, I had a mentor who already had the scanner. So what he would do is whatever he would scan, he would give it to me. Give £3,000 a year from a scanner, because my mentor would give me his scanned watch list. And so whatever my mentor was trading, I was trading. You need to be surrounded by the right people, guys. And this is what I now do for my community. I've got the scanner and I give them the scanned watch list so that they have access to the stocks that I'm trading. So let's have a look at some of the stocks that I'm trading. And this is really important, guys, because when the foreign exchange market is quiet, where is the money? And the money's usually in stocks or commodities. You don't want to be fixated on one market. The reality is this: people who don't have money trade foreign exchange. People who do have money trade stocks. People who don't have money trade foreign exchange. Why? Because you can open a broker account with £50 and the broker makes them believe that £50 is enough. Whereas to open a stocks account, you need to have a minimum of £5,000 to £10,000 to be able to open up a stocks account. So a lot of people don't trade stocks because they aren't funded. And so they just trade foreign exchange. And that's where they then overtrade. The key is to be well funded. The key is to understand what it takes to be a trader. Now, again, do it in stages. You can start in foreign exchange, but when foreign exchange is quiet, start understanding the stock market. Doesn't necessarily mean you have to trade it, but start understanding it. When you understand it, you will understand, okay, right, now I need to get the money to trade stocks. And so how do you go and get money to trade stocks? Save. Get a better job that pays you more money. There's no shortcut. People always want the quickest route. That's why everyone is trading foreign exchange, because it's advertised as a way to quick riches. It isn't, guys. Another stock that I am currently long on is IDXX. You can see how this is now cleared the all-time high. I entered it at just below $90, and you can see this is above $110. Another stock. I'm giving you valuable information here, guys. I'm actually giving, these are stocks that my community pay good money to be a part of so that they get access to this. My community actually save around £10,000 a year in stocks information. First of all, they don't pay £3,000 for the stock scanner a year. And secondly, the watch list. If you go on the internet and you want access to the best stocks, there'll be people out there who sell them, and they sell them for hundreds to thousands of pounds on a monthly basis. My community get these watch lists as an added benefit for no extra cost of being a member of the community, saving themselves around £10,000 a year. Another stock that we are watching is a company called Woof. See for yourself, is broken through the all-time high, and it's now, remember guys, this is the monthly chart. This is not a 1 hour chart or even a daily chart. This is a monthly chart, so you can see very clearly the highs. At the moment, it's going through a bit of a correction. This is not a reversal. This is just a correction. If you look at this last bull run, move, little bit of a stall, 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 move. Here we got the same thing, move, little bit of a stall. We cannot expect price to continuously create highs. Look at this last trend here, same thing, move, a bit of a stall, move, consolidation, move, consolidation, move, consolidation, so on and so forth. This is a very neat looking trend. This is what you want to be looking at. Again, here, another stock I've traded in the past, Marriott Hotels. You can see here for yourself. I traded this from $40 all the way through to $80 before being stopped out. This is back in 2013, 2014. Southwest Airlines, another very good looking stock. Delta Airlines, again, another good looking stock. Back here. Right now, no. But back then, remember what I said about price when it's inside the pink lines? Here's another example. Inside the pink lines, you don't want to be traded. But if we go back to NVIDIA, we can see that price is trading above the pink lines, and we have that bullish bias. I didn't trade it from here because it was inside the pink lines. I waited for it to break out, and that's when it started creating new highs. If you guys are in America, then a stock that I traded was KR, Kroger, which is like a grocery store. You can see, again, another good run to the upside, but right now it's within an area of consolidation and it's inside the pink lines. Okay, so it really is about knowing, first of all, where is the money? Is it in foreign exchange? Is it in stocks? Is it in commodities? Once you've understood that, you then need to understand which instruments are trending or which instruments are worth trading. You don't want to just trade something like Apple because it's Apple. Let's have a look at the stock of Apple. People are fixated with Apple because the new iPhone 7 or whatever has come out. But look at what Apple has been doing. It's been inside the pink lines for a long time. Okay, it's now starting to gather a bit of momentum to the upside. But until it clears this high, you don't want to be trading this. They're already much better looking stocks. Let's have a look at Amazon. I think AMZN. Excuse me, AMZN, I believe. Amazon. There you go, Amazon, right. So if I could trade either Apple or Amazon, you can see that Amazon is above the high and it's now creating new highs. It's a very expensive stock, so not everyone will be able to afford Amazon to be able to trade it. But the point is, there are stocks out there that, even with smaller accounts, when I say smaller, I mean you need at least £5,000 to £10,000. There will be stocks that you can trade. The more expensive stocks, you may not be able to trade, but it's something that you can aim towards, aspire to be able to trade. It's a journey, guys. I cannot stress this enough to you guys. It really is a journey. So let's quickly go back to some of the currencies that I'm looking at. So the pound dollar, my focus is very much on the yen currencies and the pound currencies because they're all the ones that are trading outside of the pink lines. All other currencies are inside the pink line. So if you look at the pound dollar, open the monthly chart below the pink line, so we have a bearish bias. It's below the 200, below the 50. So these are both acting as resistance. Below the 200, but above the 50. So this is acting as support. So what we need to do, and if we look at price, it's just going sideways. This is Brexit. Okay, so this is the move of Brexit. If you look at what was happened before Brexit, the market was going sideways. Then we had that big drop in price. And look at where we had that drop, 1.5, which is a major resistance level. And now the market has just gone back into consolidation. Why? Because what generally happens is that after a big news release like Brexit, the market tends to go back to what it was doing before. Before it was in consolidation, we had Brexit, it's now back in consolidation. 1.3 is acting as a sort of level where price is comfortable. What we need is momentum to the downside. When price breaks and closes below this July support, that's when I'll start adding further positions. I'm already short on this. I've got one position, which is in and out of profit loss, profit loss. It's a very small position with 1% risk. If it breaks and closes below this level, I'll start adding further positions. Now, this is where a lot of traders struggle. Because I've been holding it since July and it's just been going sideways, people think you're crazy, you're not making money. But you've seen the stocks that I am in. NVIDIA has grown my account by a huge percentage. So even though my foreign exchange accounts may not be going anywhere, my stocks accounts are growing very nicely because that's where the momentum is at the moment. Know what to do. Split your money, have foreign exchange accounts, have stocks accounts, and trade accordingly. Okay, if you go to the pound Aussie dollar, the pound Aussie dollar is another currency that is looking interesting. You can see that it's below the pink line on the monthly, struggling around this support level. You can see there's a support level here from 2014, and that's 1.7 round number. Weekly, below the 50, below the 200, so bearish, below the 200 but above the 50. But if you look at price, it's consolidating. Moving averages are very useful because when they start going flat, you can see that the 50 is flat here. It's telling you it's in a consolidation. Here it was heading down and we were in some kind of down move, but now it's flat, telling us consolidation. Again, patience. This is not a reversal. We can see there's a resistance level at the top here. When it breaks and closes below this support, that's when we can start looking for shorts. Patience for now. Pound Japanese yen. Now, the pound Japanese yen is a currency that I was short on when price broke below the pink line. I was short on this for around 2,500 pips. I closed my position off around 150, and you can see that it's gone on to weaken further. Now, the reason why I closed it is because of Brexit, but we'll come to that in a second. Below the 200, below the 50, so we have a bearish bias. Currently consolidating. You can see that it's oscillating. Now, this is where range traders will go long off long off support, short of resistance. It's just a short-lived way of trading. You want space. Below the 200, above the 50, again acting as a support level. You can see that I went short around this level here. I held my positions. I had multiple positions. I held my positions and I closed them off around here. Reason why I closed them is because of Brexit. I manually closed my positions because of Brexit. Now, of course, in hindsight, I should have held my position open and I'd be in more profit. However, what if this was a big green bar? And when the markets react to news that quickly, then your stops may not be honored at that level, because if there's no one on the opposite side of your trade to take your position, it will go through your stop loss, and all that profit I accumulated, I would have given it back and more. So for me, it wasn't worth the risk. Always focus on the downside. Focus on capital protection, not on your money. The money will take care of itself. And the final one we'll look at is the pound New Zealand dollar. Pound New Zealand dollar is now at an all-time low. If it clears this, then we could see weakness below the 50, below the 200, below the 200. The 50 is acting as resistance. It is flattening out. But if we start seeing further weakness and a breaking close below the support, then shorting positions will be on offer. Okay, going to quickly go back to the window. Okay. Yes, if you can contact me on Zaheer at tdtpro.com. Okay, Zaheer at tdtpro.com. If you go to tdtpro.trade, this is also it's an introductory course to our courses. It's £99 for a whole month of training, so you could sign up to that. There is bespoke one-to-one training, which is the next stage, but a good place to start is on the monthly on this monthly course, which is £99 for a whole month of trading. If you're in the UK, that will include VAT. Please add me on Facebook, guys. If you are on Facebook, just search for my name, Zaheer Anwari. You could also look for our Facebook page, which is The Dynamic Trader. Lots of reviews of our current members, lots of charts, hints, tips, etc. A lot of information on there. Okay, so it'd be good if you guys could like our Facebook page. If you're on LinkedIn, please search for me and add me on LinkedIn. And finally, if you send me over your email address, I will send over this ebook, which was written by one of my mentors called Anne Chapman. And you can see that it's a complete breakdown. Where's the content page? Trading bias, establishing the trend. It's a 13 chapter breakdown of technical analysis, guys. And this will change everything that you understand about trading. Everything. This is changing the way people look at the charts, the industry. This is a groundbreaking ebook. Now, remember, this is not trading. This is technical analysis. You still need to understand entry points, stop losses, risk management, all of those things. They still need to be understood. But this is simply about technical analysis. So if you send me an email, guys, I will then be able to send you this book. Okay. I am on Instagram. I've gone back to fx.mentor. I don't use Instagram too much anymore. It's a waste of time. People on Instagram are young. 19, 20. Everyone's looking for free information. Everyone's searching for a free mentor. You know, it's full of immature young kids. If you are business minded, then you will look beyond Instagram, and you'll look at ways of investing into trading as a business. But I'm on there, you know, I still have my profile, but you know, I don't use it, you know, very sporadically, and I don't put up any information on there anymore. Okay, guys, thank you very much, Adinda. Thank you for your time. FX Street, thank you. Thank you to B. Hi, Fred, and EDZFX. Thank you all very much for your time. And everyone else, I don't know who's on here, but if you are on here, but you're not in the chat room, I don't know if that's possible, then thank you all very much for your time. And I look forward to you contacting me and potentially taking things further. Okay, guys, have a lovely end to the day, and I will see you soon. Thank you. Bye-bye.